Hey guys, so I wanted to go in a bit more detail here today and look at a specific trade that's actually my favorite trade right now. And it really kind of it comes in the back of our thesis that we think the energy market, the energy sector of equities, has a lot higher to go over let's call it a multi-month, multi-quarter lens. And so in order to show you this, let me just get right to a couple of charts that I think very quickly show the idea. We're going to get to this relative chart in just a second, but let's first of all just keep in mind where the S&P 500 is, what that looks like through the lens of a long-term sort of monthly outlook. And, we all know there's been a massive move in the S&P, largely due to a market capitalization weights in the index, and we really think that this is an index that is very limited in terms of how much upside it can do. Maybe there's another 100, 200 points. Great. Not all that interesting. So what we like to put on here is what we call it sort of a relative trade, where we want to be underweight or even net short the S&P 500. There's many ways in which you could put that on. You could buy some puts in the SPY that expire a few months out. Our preferred way is basically do what's called an options credit spread, where we basically would sell a call. I'll quickly give you guys the visuals on this. We would say sell a call up here and then buy against that for protection, another call, and thereby basically making a bet that the S&P doesn't go above that lower line, and we will continuously roll that trade. And that's, again, not because we don't think the S&P has any upside, but because we think, particularly relative to, say, the energy market, it really has almost no upside, and again, in relative terms. So that's one side of the leg. The other side of the leg has anything and everything to do with what's going on in really oil, and maybe I should start with that first. Just quickly give you guys the oil market. This is the chart of oil. I should probably bring up the right contract so you guys can see this. I'll just bring up the mini futures. Great. No feed on that right now. Then we'll just look at the XLE. Okay, this is an ETF of energy stocks, and if you look at this through the lens of a long enough time period, you can see it's been quite the bear market. Now, we really think that a lot of the equities that are completely under-owned, and most people haven't cared about these the least bit because it's been such a frustrating trade for a decade almost. We really think the energy sector has a lot more upside, and this isn't a call for tomorrow or the next week. This is really through at least a multi-month, more like a multi-quarter kind of time frame, possibly multi-year. So this is a trade that we likely could keep on for quite some time. So what's really interesting about this is if you look at energy, and again, you can look at individual equities as well, but you look at the energy sector, in absolute terms, it looks bullish. If you do something which is our favorite thing to do, is look at things in relative terms. And I created this chart here. You can see the chart almost looks exactly like the actual chart of the XLE ETF, which I should say is the S&P 500 energy sector ETF. I should have said that earlier. And what's really interesting, what's really curious, and what's really good is that the relative chart, so what I did here is I took the XLE and I divided it by the S&P. This gives us the ratio, the relative strength or relative weakness of the numerator, XLE, versus the denominator, in this case, the S&P. And you can see it's optically, if you know any technical analysis, or you can just kind of see this, you can see it really looks like it wants to move higher, so in relative terms. So our favorite trade here is to be basically putting on these bear call spreads in the S&P, keep rolling them for a while, and basically being long something like an XLE ETF. There's other ETFs out there like an OIH ETF, which is probably our favorite in that space, and even individual equities in the energy market. So again, this is all about relative sort of value, if you will. There's a supply and demand issue going on. We're coming out of a post-war like period here almost, out of the pandemic. But it is also about investor positioning. And we know that a lot of people are very underweight the energy sector because it has such a low weighting in the S&P, and just because it's been boring and hasn't done anything. But we think people are going to play catch up, and these energy stocks could really, really catch up. So if this was helpful for you, leave us a comment. down below, thumbs up, like, and we'll see you soon.